What if you could predict market movements with more precision? Avoid getting caught in false breakouts and, make smarter trades just by simply understanding market volatility. Well, that is exactly what the Jurik Volatility Bands can do for you. So in this video, we are diving deep into this advanced volatility indicator, how it works, and how to use it to refine your trading strategy. So whether you are a day trader, swing trader, or scalper, this tool is a game changer when it comes to understanding price action and volatility. So before we dive in, don't forget to smash that like button and subscribe to the channel so you never miss out on these in-depth trading insights, okay? Let us get started. So let us begin with the basics. All right, let us begin with the basics. Now, what exactly are the Jurik Volatility Bands? What does this even mean? The Jurik Volatility Bands are an advanced volatility indicator that is designed to give traders a clearer, more accurate picture of market volatility. Okay, so just think of them as an upgraded version of traditional Bollinger Bands, but with a significant advantage. They adapt to market conditions more effectively. So instead of being used, or rather, instead of being based solely on standard deviation, like the Bollinger Band, because the Bollinger Bands are based on standard deviation, right? The Jurik Volatility Bands use a smoothing algorithm that adjusts to both price movements and volatility, which means you get a much more precise reading of market fluctuations. This makes them a great tool for identifying areas of high or low volatility and spotting potential breakout points. In other words, the Jurik Volatility Bands provide a visual representation of market uncertainty. The bands will widen when volatility increases. You can see this is a very good example. When we had an increase in volatility around this zone, can you see that the bands widened? You can see that for yourself. Okay, but when there is low volatility, the bands will tighten, and you can see this is what happened here. Can you see? There was low volatility around here, and you can see how the bands tightened. In fact, I think it's going to be from somewhere around here, right? You can see the bands tightened when there was low volatility, but when volatility was high, you can see how the bands widened. Okay, so it helps you to stay on top of major price moves. Now, let us talk about how to interpret Jurik Volatility Bands and what they are actually telling us about the market. Here's the key. The bands expand and contract based on volatility shifts. Okay, so when the bands widen, it indicates that market volatility is increasing, which can signal a potential breakout or a larger price movement. Then when the bands contract, it means volatility is decreasing, often signaling that the market is in a consolidation phase, or preparing for a breakout. Now, with respect to wide bands, when the bands start widening, it's usually a sign of increased volatility. So high volatility often precedes major price moves, which can be ideal for catching a breakout or entering a trend early. All right. Then now, with respect to narrow bands, when the bands narrow, it means the market is in a period of lower volatility. During this time, the market is likely consolidating or waiting for a catalyst that could trigger a move. This is often a waiting period, for traders that are looking for a breakout setup. But here's the crucial part. Jurik volatility bands are dynamic, okay, meaning they adapt to changes in market conditions, unlike static bands like Bollinger Bands. So if the market suddenly becomes more volatile, the bands will widen naturally, helping you stay in tune with the market's true behavior. Now that we know how Jurik volatility bands work, let us talk about how to use them effectively in your trading strategy. So the first strategy we're going to be looking at is identifying breakouts. Okay, one of the best ways to use the Jurik volatility bands is to identify breakouts when the bands start to widen. Yeah, when the bands start to widen, especially after a period of consolidation. You can see we had a consolidation here, right? We had a consolidation here. So when the band starts to widen, especially after a period of consolidation, which is represented by narrow bands, it often signals that volatility is increasing. So this is the perfect time to set up a breakout trade. Look for price to push past the upper, the resistance zone of that consolidation, the upper level, right? So look for price to go past that. When you have a confirmation of that breakout, then you can look for a buy opportunity. That is a bullish breakout, right? If it's a bullish breakout, then look for a buy opportunity. But if it's a case where you have a bearish breakout, then you look for sell opportunity, of course. Now, secondly, you can use this indicator to spot reversals. The Jurik volatility bands can also help spot reversals. When the bands widen and price moves, in a steep slope, you can be looking for signs of exhaustion. If price doesn't sustain the breakout, for example, this could be an early indication of a reversal. Okay, so you can combine this with other indicators as well, like RSI or MACD to confirm the potential shift. All right, now another strategy is for risk management and stop loss placement. Since the bands adjust dynamically, you can use them for better risk management. If price, moves in one direction and then reverses quickly, you can consider placing your stop loss maybe when the bands are widening, right? When the bands are widening, which is showing increased volatility, and then you notice price just spikes suddenly to one direction and start reversing, then you can consider placing your stop loss just beyond. It depends, but I would recommend trading in the direction of the trend. All right, ensure that it's in the direction of the trend. But if there was something like a whipsaw, then of course you should give some space when setting your stop loss. All right, give some space because the widening of the band is going to show that there is high volatility, so you should be cautious with the levels where you set your stop loss. But remember, the key is combining these strategies with other technical tools such as support and resistance, trend lines, or candlestick patterns to improve the accuracy of your setups. Now, before we wrap up, here are a few final tips for making the most out of the Jurik volatility bands. Look for confluence, okay? Do not rely solely on the bands. Combine them with price action, support and resistance levels, or even moving averages to create more reliable setups. You can even add Bollinger Bands to add, for extra confirmation, because the Jurik, you can see that Jurik volatility bands have its own indicator window, but you can add Bollinger Bands as well to notice if there are going to be confluences with widening, because the Bollinger Bands also displays widening of bands and contracting of bands. So you can also add Bollinger Bands as a confirmation tool in addition to the Jurik volatility band, since the Jurik volatility band has its own indicator window. Okay, and then ensure you watch for divergence. If price is moving higher but the bands are tightening, there could be a potential loss of momentum. So that could be signaling a reversal. So take note of that. And also ensure you use multiple time frames. While Jurik volatility bands work great on smaller time frames, always check higher time frames to confirm the overall trend direction. Okay, this can give you greater context when making decisions. So by integrating Jurik volatility bands into your trading routine, you can gain a clearer understanding of market volatility and make better informed decisions. If you found this video helpful, don't forget to hit that like button and subscribe for more trading insights and strategies. Let me know in the comments. Have you used Jurik volatility bands before, or are you planning to? How do you incorporate volatility indicators into your strategy? Thank you for watching, and I'll see you in the next one. Happy trading.